If you're considering buying with a 5% down payment, then you're probably weighing out these two top options. There's conventional financing or standard FHA financing. Did you know that you can buy a home with only 5% down and the seller's permitted to pay for the closing costs? On a $700,000 home, that's around $35,000 total out of pocket. Hi there, I'm a licensed real estate broker and home loan officer in California. Over the years, I've helped thousands of buyers into their first home using conventional and other low-down payment programs. In this video, we'll cover everything you need to know about this program, including the program benefits, guidelines, credit events. I'll share a buyer's experience using this program and a visual cost breakdown of his purchase details. This loan is designed for borrowers that have excellent credit, carry minimal debt, and are looking for a single unit home with a 5% down. Now, you can do 1 to 4 units, but I'm going to focus on single unit homes on this video. If you have stable income and a credit score of 620 or higher, you can qualify for this program. But if you're under 680, I'd highly recommend the FHA loan. I'll elaborate more further. No mortgage insurance. Many buyers don't realize that the conventional loan have no upfront mortgage insurance fees, and PMI can be canceled once you reach the 20% equity mark, something FHA loans don't offer unless you buy with a minimum of 10% down. PMI cancellation. The PMI is cancelable once it's no longer required. Let's talk about the cancellation. Private mortgage insurance is removable once you have 20% equity. That means that you owe 80% of the value or less. Now you can get here 3 different ways. The property can actually increase by 20%. The loan amount can decrease by 20%, or it can be a combo of the two. An example would be that the property increases 10% and then the loan amount decreases by 10%, giving you a total of 20% equity. Let's talk about gift funds. Gift funds can cover both your down payment and your closing costs, so there's no minimum buyer contribution required. And let's move on to the guidelines. Let's talk about property types. These are the eligible property types: single-family residences, condos, 2 to 4 unit properties, PUDs, and manufactured homes. Credit scores. The minimum credit score is a 620, but if your score is under 680, FHA is going to be better on the interest rate, at least 0.5% better, and PMI payments. Debt ratios. The maximum debt ratio is usually 45%. However, when you have a 700 score or higher, then your ratios can actually go up to 50%. Occupancy type. You must occupy the property. Let's talk income limits. There are no income limits for this program. Loan amount limits. There are loan amount limits based on counties. I'll clarify further coming up. Seller assistance. The sellers can pay up to a maximum of 3% of the sales price towards your closing costs. First-time buyer requirements, not required on this program. Let me add some further details on the guidelines. Let's talk about the loan amount limits. The maximum loan amount limit for most areas is going to be this amount of $806,500 in 2025. Now, high-cost areas like LA or Orange County, then this becomes the maximum loan limit. Now, the limits I'm pointing out are for single unit properties, but you can see multi-units also have their limits. Let's talk about accessory dwelling units. You can buy a single family residence with a legally permitted ADU, and you get to use the rents to qualify. Let's move on to credit event guidelines. Bankruptcy Chapter 7, you need 4 years after the discharge. BK Chapter 13, 2 years from the discharge or dismissal. Foreclosure, 7-year seasoning, or 4 years under very unique circumstances. I'll talk about that further. Unpaid collections are allowed, but they may impact your mortgage insurance rates. Unpaid charge-offs should be resolved for best pricing and loan terms. Let me add some further details on the foreclosure guidelines. Foreclosures. A 7-year waiting period is required after a foreclosure. But an exception can be made after a 4-year waiting period under certain conditions. This exception is granted when extenuating circumstances can be documented. That's real important, meaning the foreclosure was caused by events beyond the borrower's control, such as a sudden, significant, and prolonged reduction of income or a catastrophic increase in financial obligations. I've actually closed loans under these circumstances, but you must be able to provide the documentation to support the circumstances. Let me share a buyer's experience using this program. Meet Emily, a first-time home buyer with a 750 credit score and $28,000 in savings. She purchased her first home for $650,000 with only 5% down. Her only out-of-pocket was the actual down payment. And here's a visual breakdown of Emily's transaction. This was her purchase price. Here are her closing costs, and this was the total acquisition cost. Now, let's take a look at the funds. Here's the conventional loan amount, and here are the closing costs that were negotiated to be paid by the seller. And this was her total out-of-pocket. If you have a realtor, we work together with your realtor. If you don't have a realtor, I can connect you with realtors that are great at getting offers accepted with these types of programs. Ready to get started or just want to inquire? You can click the link below to set up a time at your convenience. Even if you're not ready to buy now, I encourage you to inquire today. Knowing your available options can help you better plan for the future. I hope you found this helpful. Go ahead and hit that like button and share it with someone who can benefit as well. And don't forget to subscribe to get our latest videos. Until next time, I'll see you on the next one.